Karen.
Sorry, I apparently had my mic on mute. I'm Karen Bonder. I am the wife of an Air Force veteran. She served for 22 years. And so I'm a CPA by trade. And what I'm going to do go through here in the seminar is the federal filing requirements and some scenarios real quick before we get into the states, just to give you a background of, why there's a complication in filing taxes for us as same-sex couples. So there's a disclaimer. This is, I'm not giving necessarily tax advice to each of you individually, but I'm doing it as a whole. So are you really married? That basically depends on where it is that you were married. If you were married in a state where it's recognized, no matter where you reside, you're recognized as married for filing your federal tax returns. So if you were married prior to December 31st of 2013, and you're considered married even if you got married on December 31st of 2013. It doesn't matter if you were single for 364 days. If you were married for one, you're married for the entire year for the federal tax returns. So please note that if you were in a registered domestic partnership or a civil union, they are not recognized for joint tax return filing status for the federal. So one of the questions that comes up quite often is, do you file jointly or separately? You have to file married either jointly or separately if you're married. It used to be, we could file single and allocate deductions one way or the other, but that's no longer the case. So you have to file married, whether it's jointly or separately. There's advantages and disadvantages to both. So filing your joint tax return, one of the things that you need to make sure that you do is that you list your legal name according to the Social Security office. Your driver's license, because of the state of residence, may not match your Social Security card, but your tax return does have to match your Social Security card. The other thing that's key is once you establish who the taxpayer is and who the spouse is, from that point forward, you need to remain in the same positions. So the taxpayer will remain in the taxpayer position and the spouse will remain there. So if you file separately, the form's a little bit different, or the way that you fill out the form is a little different. You have your taxpayer. Both Social Security numbers go to the right, and the spouse's name will actually go down below as shown in this excerpt. So Schedule A, this is where you have your itemized deductions. In the past, as two single taxpayers, we've been able to allocate based on who maybe made the most money. One person would take 100% of the itemized deductions, whereas one would take the standard. When you file separately, that's no longer available. When you file jointly, of course, you both report the same deductions on that joint tax return. So the disadvantage of filing separately is that if one spouse itemizes, the other one has to itemize as well, even if it's less than the standard deduction. So that's one of the things to take into consideration if you are looking at filing separately. This is a sample of the, oops, I didn't mean to go that fast. Let's see if I can go back. Yes. So this is the Schedule A, and it basically shows what items you can take on your Schedule A. Here's the medical is now 10%, so for the majority of taxpayers, there's minimal advantage to taking medical expenses unless you've had a bad year in terms of paying out for health expenses. Other miscellaneous deductions: if you have gambling winnings, you can take your gambling losses as a 100% deduction on your Schedule A. And here's the, basically the scenario as to whether or not you should file separately. Do you live with do you have to live with your spouse in order to file jointly? The answer is no. You can file jointly even when separated by deployment or by living in separate states. Will you itemize? If you itemize, look at the advantage of being able to do each of you itemizing and having it have a positive effect on your tax. If one spouse makes significantly more than the other, that might be, a reason to file separately because of the marriage tax penalty. If you get into the higher tax brackets, there's actually a penalty to being married because of the width of the tax brackets. And if you live in a community property state, one of the things that you have to do is follow what's called Publication 555, which is basically stating that if you file separately, each of you has to report 50% of your income from your spouse. So in essence, you split the income down the middle, 50-50, for each other, and that's the way that you have to report it. So one of the things that you have to be aware of is that if you have children and you have physically lived with your spouse for more than 6 months, you cannot file head of household anymore. I'm going to run through these scenarios real quick. This is a scenario where both of the spouses make basically the same and they're taking the standard deduction. There's really not a penalty for doing a joint tax return versus a separate tax return. It's a $6 penalty. Now, when you get into this situation where one makes significantly more than the other and they take the standard deduction, you can see down in the right-hand side, if you file a tax return jointly, there's a $3,600 savings. So the last scenario that we'll go through is if you itemize and utilizing the itemized deductions. So it gives you a little bit less of a tax savings, but it still gives you a tax savings of almost $2,100. So if you read down at the bottom, the split on the itemized deductions is not equal because usually the higher earner will have more state taxes that they'll pay. So here we're getting into the states reporting, and the good news is that there are states that don't have income tax, so there's no state filing requirement, and there's 7 of them. And so you just file your federal tax return and you're done with your reporting requirements. So I've noted that Nevada, Texas, and Washington are community property states. So if you filed married filing separately, you have to follow the rules that we discussed under Publication 555, which requires each of you to report 50% of your spouse's income on your federal filing separate tax returns. Marriage equality states. The good news is when I did the math on this, there's only 23 out of 51 that will not recognize same-sex marriages for state tax reporting. So we're over the 50% as far as taxes go. So that's the good news. We definitely gained momentum in 2013 and hope to carry that forward in 2014. So these are the states that if you reside here or your state of record or these states, you can file a joint tax return at the state level. Oregon doesn't allow same-sex marriages to be formed, but they do recognize same-sex marriages from other states where it's legal. So you can file a joint tax return in the state of Oregon. And then there are 3 other states that at this particular point in time, at this snapshot in time, Colorado will allow you to file a joint tax return. Missouri at this point, until it may play out in court, but at this particular point in time, Missouri, you can file a joint tax return as authorized by the governor. And in Utah, you can file a joint tax return. And that's also subject to change depending on the way that the appeals go. So here's the non-marriage. Yeah.
Can I just interrupt with you with a question, Karen? Can you go back to your last slide?
Absolutely.
Okay, so with respect to, so the equality states are relatively straightforward in that if you live in the equality state, obviously that, sorry you guys, my phone is going crazy, that you would do both state and, excuse me, federal and state tax returns. And you can do them either jointly or separately, whatever you prefer or whatever is best for your financial outcome. Is that correct so far?
That is correct, right. So
Okay.
from you know, these states, and there's I believe there was 21 of them. There's 21 states that when you file your federal tax return as married, filing, you know, whether it's separately or jointly, but you're filing as married, these states will allow you to file a state married tax return as well.
Okay, and then going on to Oregon, I'm sorry?
I said in the District of Columbia. I forget that it's not a state, it's a district.
Okay, and then for Oregon, just to clarify for our audience, Oregon does not allow same-sex marriages to be performed there. However, they will allow people to file state taxes for Oregon. Now, do they require same-sex married couples to file separate versus joint? Do they allow same-sex married couples to have a choice in that?
They have the choice similar to the other states where your filing status is married, whether it's joint or separate.
And is that the case also for Colorado, Missouri, and Utah? Yes. Are they can do either joint or separate? But the more like the announcement that's more of note is just the fact that they actually can submit married taxes. Is that right?
Right. Okay. And why we're talking about that, it was interesting in my reading. The state of Montana does not verify your marital status. So there's those that believe that you could file your tax return in Montana as a married couple, but there's others that are saying no. You know, there's, you know, the more conservative, which I agree with, is that you file as two individuals.
Okay.
But yeah, these states recognize your marriage for state filing, so you have to file either joint or separate tax returns in these states in the district.
Okay, and then my last question is, in states, for example, Oregon, Colorado, Missouri, and Utah, do our members that are married then have to file as married in those areas?
If they file their federal tax return as married, they will need to file as married in those states as well.
Okay, perfect. That was a question that was submitted. Perfect. Thank you.
Okay. So here's the non-marriage equality states, and this is where things get very complicated, and I would expect the majority of the questions to come from this. So I'm going to go over a quick overview. You'll notice that there are little symbols next to each of some of the states. Some of them are blank, and it's because of how they are requiring you to file in their state if you file a federal tax return. So I'm going to pull up the legend for you here. The states that have the symbols use the federal adjusted gross income from your 1040 as the beginning of their tax returns. And so when you file federal joint tax returns, 100% of both the taxpayer and the spouse's income is listed on that federal adjusted gross income line. So there's, I believe, 5 states that are requiring a schedule of the allocation of the income to be sent with your single tax return so that they know how to allocate the federal adjusted gross income. And those states are Arizona, Kansas, North Dakota, and Wisconsin. Did I get 5? 1, 2. In Ohio. So they know whose income belongs to whom, so the taxpayers versus the spouse's income. There are a number of states that require a sample federal income tax return be prepared as a single taxpayer for both the taxpayer and the spouse, and that that federal income, basically rolls into your state, and then you do not have to submit the sample federal income tax return unless they request it. But you would need to have it for your records in case there's any need for a verification of whose income was whose. So Alabama is unusual in that they're requiring that you apportion your Alabama income based on the ratio of your federal income. So say one spouse makes 60% of the income and the other spouse makes 40%. When you fill out your Alabama tax return, 60% would be allocated to the one spouse and 40% to the other. So it's an unusual approach, in my opinion, on how to report for the state, but that's the requirement that they've put out there.
Okay.
So go ahead.
Oh, sorry. Go ahead. Finish up, and then I'll ask a few questions.
So the states that don't have any symbols next to them are states that don't start with the federal adjusted gross income. So there's no requirement to separate your income on a federal level. So they all start with your personal income. So there's no additional, other than if you're preparing your tax return in a software, there's no additional work that needs to be done for the state to report your income separately from your spouse.
Perfect. Okay. So just to kind of summarize and make sure that this is in layman's terms, because I'm not so great with snazzy tax terms. So I just want to make sure that we summarize this slide, because this is, like you said, very, very confusing for folks. So first off, there was a mention about, or the word joint, federal joint taxes was mentioned during this slide, presenting this slide, and I want to make sure that this slide, or the information in this slide, does it apply regardless if you file joint or separate in a federal tax?
It only applies if you do a joint tax return, because the income on that joint tax return will be both
combined
spouses' income, right?
Okay.
So if you're married filing separately, you're already reporting just your income.
Great. So this slide is really important for those of you who do choose to file your federal taxes jointly. Then you'll want to look at this, because the income, or like the adjusted gross income that you then use to file your state taxes, is basically obviously going to be combined between the two spouses, because it's how it was filed through the federal taxes. And then you go to the individual state, your individual state. So for example, somebody in, let's say, Kansas, and you look at the star and it says, this means that since you're filing your Kansas state taxes and you're starting off with the combined dollar amount that has both your and your spouse's income tax combined, this state, for example, in this example it's Texas, is requiring you to submit some sort of schedule that allocates, that specifically identifies, what is it, a dollar amount per spouse?
It's a dollar amount, correct. And,
okay.
And if I'm going to actually, if I can at this point, move over to the actual form. I have a copy of the one for Ohio, so I'm going to stop sharing my screen for a minute while I go through my document.
And while you're looking through it, Karen, I'm going to clarify the second symbol, which is the little caret sign. So for example, somebody who's in a state with that little kind of upper arrow sign, you said that they don't necessarily have to submit anything extra for these particular states. They just kind of want to have it on hand that in the event that the state, they're either audited or the state asks them for additional information. Is that correct?
That is correct, yes. They would need it for verification that they reported their income individually correct.
Okay, and then the last symbol, just to clarify for everybody, anybody who's in Alabama, the little omega symbol says that, or means that you must, instead of submitting something with a dollar amount, you actually just submit a percentage. Am I understanding that correctly?
Right, and that one, like I said, is very confusing because it's based on a ratio. of your federal income tax reporting. And
Okay.
if you give me a second, there's a tax guidance out on the Alabama website for this as well, and it says that the same-sex couples who file a joint federal tax return must allocate the federal income tax liability shown in the couple's joint federal tax return to each individual based on the ratio of the individual's separate federal adjusted gross income. So, I mean, I do this for a living, and I'm confused by some of the things that they're requiring.
Okay.
And it does state for Alabama you have to send a copy of your federal tax return, your 1040 tax form does need to be submitted with your Alabama tax return. So they do want a copy of your federal tax return in the state of Alabama.
Okay. And then one last question, and I'll let you move forward, is for the states that have that little like upper arrow sign, the caret sign, does that mean that those individuals preparing their state taxes, do they need to do a mock federal return as if they are single, or do they need to do okay, so not married separate, but they actually literally need to do a mock federal as if they are single, not married at all?
Correct.
Okay.
Except for the community property states, they have that little the publication 555 that they have to follow. So that actually, I'm trying to think, if the states don't recognize then that would be just an individual. So on the mock tax return that you have to do for a state, it would be a federal single tax return. Okay, so here is the Ohio Department of Taxation schedule. The majority of the states are calling it an S, and I believe it's probably has to do with either same gender or single, but you have to list your legal name and their Social Security number, and then as you go down the form, it shows you that it's the amount reported on your federal joint tax return or the federal filing separately. So that's interesting. I didn't realize that that is the case. An amount reported on federal married filings tax return for taxpayer 2. And then each taxpayer will then show what their individual wages were and taxable interest was. And my guess would be that whatever's under A and B has to match what's under C and D. So when you get to the bottom, there's, sorry for scrolling through here. The last line here, all of these items from line 29 and up are on page 1 of your 1040 tax return, and that's what makes up your adjusted gross income on the federal level. So I'm going to flip back over to the slideshow, so I'm going to stop sharing my screen and then come back. Lori, are there any other questions?
Sorry. Yes. There's quite a few, so I'm going to just go through a couple of them, and then.
That's what I figured. That's why I was like.
Let's see. Okay, so we've got. There was one question that I think is just an easy clarification is, does the wedding date within 2013 matter? And I believe that this question was already kind of answered. It might have been asked prior to you mentioning this. So if we were married, for example, in the middle of the year, does our combined household income count as if we were married throughout the entire year? And the answer is yes. It doesn't matter what date you are married within 2013. Your taxes will treat the entire year as if you were married every single day that year.
That is correct.
And then the last, I'm going to wait on that very long question. Let's see. There's several questions about, many people who, where the service member and the spouse live in different states. And I mean, as you can imagine, that's more common than not with our couples. So for example, one question is, if you're a military member and you're a resident of Florida, for example, and there's no state tax for Florida, but the spouse is a resident for another state. And in this particular question, the spouse is a resident of a state that does not recognize same-sex marriage. So in that case, you kind of went over that with this slide that's on the that's being displayed right now, where it depends what they need to do based on wherever the state is that the spouse is in, right? It's almost
Correct.
like it doesn't. So the service member doesn't necessarily have to, quote unquote, file taxes, state taxes for Florida because it's not required. But so therefore the requirement is left to whatever the state is that the spouse resides in. Is that correct?
That is correct. And here, because the state does not recognize the marriage, the spouse will actually file a single tax return for that state and will only include their income on that state tax return.
Okay.
None of the. I mean, it's very cut and dry on the only income being reported would be that spouse's income, because the state doesn't recognize that they're married.
Okay, so even if you are married and you file your federal taxes as married, because you're required to now, or we're supposed to because of the law change, if you live in a state where marriage is not a non-marriage equality state, obviously you can't file your taxes as married, but you're still required to file your taxes. You just need to be very cautious about them, making sure that the amount of money is reflecting just your income and not yours combined with your spouse's. Is that what I'm hearing?
Correct. And if you live in one of the 5 states that you have to allocate your adjusted gross income based on taxpayer versus spouse from the federal tax return, you still have to file that schedule out. Okay. So that's an additional schedule that needs to be filled out. So say for instance you're in Arizona, which doesn't recognize same-sex marriages, and you're working in Arizona and your spouse is the military member and their state of record is Florida, the spouse that is a resident of Arizona will have to fill out the Form 140 as well as the Arizona Schedule S and list both the taxpayers on the form. And Arizona's schedule, I didn't download it, but I can walk you through it. It's much easier than Ohio's, I can tell you that. Ohio's is probably the most complicated. But Arizona basically says what's the amount that you've recorded on your final or your joint federal tax return, and then the amount to be allocated to taxpayer 1 and taxpayer 2. So if this was the scenario, if it was a Florida-Arizona scenario, 100% of the federal tax return would be reported, and then taxpayer 1 is whoever's listed 1 on the federal tax return should be listed as 1 on here, and then taxpayer 2 would be the spouse, and you would make sure that you report each of the incomes based on who it is, taxpayer or spouse.
Okay. And then there was a question, if we file federal as married and we file federal taxes filing jointly, we have to file state taxes as married. Well, they both live in marriage equality states. So actually, let me break this down first. So let me ask this question. So if somebody files federal jointly, do they have to file jointly in their state, or can they file separately in their state? Does one type of filing dictate what their next filing is between federal and state?
You need to check with the states, but not necessarily. I think which Louisiana is a non. I think it's Louisiana who is a non-marriage equality state, so it's a mute point for us. But there are certain states that require you to file your state return as the same as you're filing your federal.
Okay, so they would just need to know based on their state.
They just need to know based on their state. The majority of, I mean, the difficulty in filing differently from state and federal is that if you electronically file your returns, if you separate your income out in the state and they start with the federal adjusted gross income in those states, then they'll have a hard time verifying your income, and then your return may be rejected electronically. But you would be able to file on paper still. So that's a complex situation.
Okay, so the bottom line is if people within their own states need to find out if the requirement is, because some states might require you to file jointly or separately exactly as you did on your federal income tax, and they would need to figure it out if their state's one of those states. Is that what I'm hearing?
Correct.
Okay. And then, so there's a question submitted saying, if we file federal as married, filing jointly, I assume we file state taxes as married, filing separately, since we are residents of different states. So the couple in this case, one is a resident of Maryland, the other is a resident of New York.
So actually, and this is an interesting situation. You would file, and you would actually have to look at what the states require for this, but you would actually file 2 joint tax returns for each of the states, but you would file them as a non-resident for both states because both of you are not residents of the same state. And what that does is for the person that lives in the state of Maryland, it will allow you to report only the Maryland income as taxable in Maryland. As a non-resident, only the income that's earned in the state of Maryland would be reported, and the same thing with New York. When you file a non-resident tax return, it allows you to allocate the earnings from another state to that state. So you would actually have 3 tax returns as married filing jointly, 2 of them as non-resident because you don't both claim the same residency.
Okay.
And I mean, when I worked in Arizona, we had a number of couples that one lived in Arizona and one lived in California.
Right.
And so we did that for them, and so.
We also have several couples within AMPA where maybe the spouse is getting W-2s from more than one state because they've moved maybe in the middle of the year, and so I was wondering if you could kind of speak to what are the ramifications with respect to taxes, and maybe what are some of the programs that are available for military spouses in terms of what they need to report in which state should they have a W-2 from 2 or more different states.
So there are, I just spoke of the non-resident tax forms that are available. There's also part-year tax forms that are available. So when you move into or out of a state, you would file a part-year tax return for that state because you didn't live there the entire year. Similar to the non-resident tax form, the part-year resident tax form allows you to report only the earnings that you made while a resident or while you resided in that state. So if you moved, say, in May, and the first half of the year you were in Arizona, you would file a part-year resident return for Arizona, and say you moved to Michigan. You would then file a part-year tax return for Michigan, both of them being single as they're non-marriage equality states. Now, if by chance you were lucky enough that you went from Maryland to California, they're both marriage equality states, so they recognize your marriage, you would be able to do a joint return depending on the state of record for the spouse or the taxpayer, or the military person, I should say, make it easy. So again, it could be very complicated if the state of record for the military person is a different state, but you would still be able to file your returns as part your resident, and so you only would pay state tax on the earnings that you made in that state. So Michigan wouldn't be able to tax your Arizona income, and Michigan wouldn't be able to tax your Arizona income, if that makes sense.
Yeah, no, that makes sense. I'll let you move forward with your slides now. I'll interrupt you in a little bit.
All right, let me gain back. So I talked about the community property states, and this is the Pub 555, and you can find the publication 555 on the IRS website, which is irs.gov. And these are the community property states. They're Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. And the good news is that there's 3 that you don't have to worry about the state tax. And they vary depending on whether or not they recognize the marriage as well. So California, New Mexico, and Washington State do. And I think, Lori, this is what you alluded to earlier about some of the programs that are available for military spouses. I'm sorry, this is special for the military pay. I got ahead of myself. So depending on your state of record, of course, depends on whether or not your military pay is taxable. We discussed that earlier, where for some states you still have to file the tax return and then back out the military pay for tax purposes. This is the military spouse programs. It's a Military Spouse Residence Relief Act. So if the home of record for the person that's in the military is not the state of residence. So the earlier example was Florida with a non-equality state, but say it was Florida and Maryland, where marriage is recognized. As a recognized military spouse, you have the ability to have your home of record for your earnings be that home of record for the military person as well. So when you earn money in Maryland, you can actually say, for tax purposes, I'm a resident of Florida, and you won't have to pay Maryland income tax. So I haven't heard anything about how this is going to apply now that, the military itself is recognizing same-sex marriages, but I believe that it's still going to be based on the state of residence, whether or not they recognize the marriage. So, but it's nice that the IRS recognizes that as a military spouse, we move with the person that's in the military, and as was given in an example earlier where they moved in the middle of the year. Well, if your home of residency is the home of record, then you don't have to worry about filling out 2 separate tax returns. You would just fill out the tax return based on your home of record. And so they recognize that and put this into place for military spouses.
Can I ask another?
Yeah, go ahead.
Oh, sorry. I'm going to ask another question. So there is a question that was submitted. There's a couple where one individual, the service member, let's see, let me read this. The service member's state of record is Colorado, which of course is now allowing couples to file in the state. And then the spouse works in Virginia and has no, I don't think has any sort of connection with Colorado whatsoever. She is wondering, do I file in Virginia as single and have my spouse file in Colorado as single? Or does she file in Virginia as single and file married in Colorado? Or do they not, or does she not file in Virginia at all and file with her as married in Colorado? Now, as a reminder, she's working in Virginia and paying Virginia taxes currently as single, has not updated tax
So this is where it kind of gets confusing. So I'm taking it that she was there for the entire year as a resident of the state. You have what's called a tax home, and so your tax, this individual, the spouse's tax home is actually Virginia. So she does have a filing requirement in the state of Virginia. And so she would file in the state of Virginia, because it's a non-equality state, as a single person. I'm trying to think of, with Colorado, so the service member's state of record is Colorado, is that correct?
Yes.
Lori?
I'm sorry, yeah, that's correct.
So it's the state of record?
Yes.
Okay. Let me do a little bit of research on this one, because I believe what they're going to have to do is, if they want to file, and they would need to file married in Colorado because of the rulings, I believe that they would have to do a non-resident Colorado, so that the Virginia income is not being reported to the state of Colorado, even though it's the state of record, because I'm taking it the service member is actually in Virginia as well physically.
I'm not clear on that. Sarah, can you let me know if she's living in Virginia with her? That's correct. So they're both living in Virginia.
Okay. So yeah, so I believe that because the service member's W-2 will come out with Colorado as the state for the wages. And so I believe that it would have to be a non-resident married filing joint tax return, with only the service member's income being allocated to Colorado, and with the Virginia income of the spouse being excluded.
Okay, perfect. And that's to protect her from getting kind of double taxed. Is that right?
That is correct. Yes.
Okay,
yeah.
Good.
And so, that's the non-resident, because for tax purposes, even though her state of record is Colorado, for tax purposes, she's actually, residing in Virginia, if you want to look at it that way, but because of the military ability to exclude your military pay from where you're living because of your home of record, you still have to file in your home of record. And Lori, I'll get with you as far as who asked that question, so that when I do my research I can follow up with them.
Sure. And then somebody asked a question for the question of Washington, Washington being the service member's state of residence.
Okay.
And so it's basically the same question, but it's now two different states. So for example, both of the individuals in the couple are living in California. Okay. California is the spouse's state of residence and employment, but Washington is the service member's state of residence.
State of residence or state of record?
Oh, well, it must be in state of record, because she said that we're both living in California. Okay. So it must be that Washington, it sounds like Washington is the service member's state of record. They're both living in California, and the spouse is working only in California.
So again, I believe that the way that that's going to need to be filed, there's no filing requirement for the state of Washington because there is no state income tax.
Exactly.
So for the state of California, I believe that it's because it's going to be a joint tax return now, it's actually going to be filed, and I will do some more research on this, but it will be filed as a non-resident tax return as well, so that the military members' earnings that are attributable to their state of record, which is Washington State, will not be included in the California tax return for tax purposes for California.
Okay, great. Great. I'll let you move forward as some more questions come flowing in.
Okay, I think, if I'm not mistaken, it's on the Military Spouse Relief Act, you can make the choice to pay income taxes in the state of residence if you want to, if you're recognized as a military spouse. So, of course, as we get into more and more complicated situations, should you actually prepare your own return? And, you know, it really depends on where it is that, you know, you're at. Can you do a simple form on the federal? How many state tax returns are you going to have to file? Is it going to be, you know, a multi-state or multiple within a state because it's a non-equality state? And then, you know, have you prepared your tax returns in the past? And other than your marriage, were there any other major life changes, such as you purchased a home or you have a new dependent, whether through natural or through adoption? This is a key one. None of us really wants to be picked for an audit, but if you do, you know, do you want representation at that audit? And I know both, I believe, is it Tax Act and TurboTax both give you the ability to pay for someone to represent you if you were audited as well. And so the IRS, there's a website here where they provide you with guidelines for finding a preparer. And then these are just some tips. The IRS, you know, they're not ready for electronic filing yet because of their whole shutdown and new forms and such. So they're basically not accepting anything until after January 31st. So for those that have already filed and they're waiting for refunds, they're going to be waiting until early February for them. There's free filing through the IRS from the federal standpoint if you meet the criteria, and the website's there for you. So here's the key one. If you're not comfortable with preparing your own return, I recommend that you definitely find someone, a preparer, that has the knowledge of the LGBT filing issues. And this is really key, especially if you're in a non-marriage equality state, because, you know, you walk into someone's office and they're like, oh yeah, we can file your tax return for you, and if they don't understand the whole ins and outs of you're married for federal but not for state, and there's separate forms that need to be filled out and everything, you know, as a CPA we're required to get 40 hours of CPE a year. But for me, until last week, I had never experienced where an instructor in a CPA class actually discussed same-sex filing issues. And I've been a CPA for a number of years. So hopefully the trend is that more and more individuals are educating themselves. But make sure that whomever you choose, if you go to someone, that they're knowledgeable in LGBT issues. One of the ways to do that is, you know, call, you know, the LGBT Community Center. Usually they've partnered with someone in the community that knows taxes that they can refer people to. Ask a friend who they use. So it's key that you find someone that you trust as well, because you're going to be giving them an awful lot of personal information in order for them to prepare your tax return. So this is something that I hope that no one has experienced, but if you believe you were given incorrect or fraudulent advice, you do have the ability to report them to the IRS. So hopefully no one has experienced that.
Karen, can you also remind the folks who maybe weren't around for the first presentation what their kind of quote unquote consumer rights are in terms of when if they feel uncomfortable during the process and they question the preparer's knowledge, when they can versus can't back out, just to empower them.
So we had talked about this during the federal, and thank you for bringing it up, Lori. At any point in time, when you hire someone to prepare your tax return, the documents that you bring to that tax preparer are your property. They're your possession, however you want to relate to that. If at any point in time during the process of having them prepare your tax return, up into and including that they, they're ready to give you the final numbers, and you feel uncomfortable, you have the right to say, you know what, I need my documents back, and you can give them the reason, or you can just say, I need my documents back. You don't have to necessarily cite a reason for it, because they're your property. You have the right to ask for them at any point in time during the process. Now, if the actual return has been, completed and they're handing it to you in their office, there's other rules that you would have to go through in order to not have to pay them for the preparation of the tax return. So I encourage you that if you don't feel comfortable working with someone on your tax return after you've gone into their office, they start asking odd questions or questions that don't necessarily relate to what you believe filing your tax return is, then you do have the right to fire that tax preparer and ask for your documents back.
Great. And then a lot of times taxpayers will sometimes ask you to kind of sign a quote-unquote contract. Like if you sign a piece of paper, at that point, after signing that piece of paper saying that you agree to have that person do your taxes, that would probably remove your ability to kind of back out, if you will, right?
Not necessarily, because, what we, as CPAs, we don't have it's not a contract per se. It's more of an engagement agreement that basically says, from the standpoint of you're going to give, and I'll relate it to me as the CPA, I give you an engagement letter, and the engagement letter basically says, I'll prepare your tax return based on the information that you give me. I'm not going to, make any decisions without your input, and I'll deliver a tax return to you.
Okay.
At any point in time, a client can request a discontinue of the engagement. So it's not a real contract as if you were, signing a contract that said, I'm going to use your services and I'm going to pay you X amount of dollars, and the final product is Y. It's a little bit different.
Okay. No, that's really important for folks to know, because I've definitely heard stories along the way about people questioning the knowledge or maybe even appropriate behavior during the exchange. So that's good to know for folks. I'm going to go through a couple of really quick specific questions that have been submitted since we're winding down here. One question that was submitted is a situation in which the service member and spouse both live in Alabama. The service member's home of record is Pennsylvania. Would the spouse, who only worked in Alabama, need to pay state taxes to both Pennsylvania and Alabama? And then the second question is, also, if the state does not recognize same-sex marriages, does that mean you're not exempt from paying taxes to, for example, Alabama?
Okay, repeat that the second question again.
Yeah, so the second question states, verbatim says, if the state if the state does not recognize same-sex marriages, does that mean that you are not exempt from paying state taxes to Alabama?
Okay, so I think what the question is The military member's state of record is Pennsylvania, which is a non-equality state. The spouse and the service member are both living in Alabama. They'll file a federal tax return jointly. Then they will file two individual tax returns. The military member will file a Pennsylvania tax return, and the spouse will file an Alabama tax return and pay taxes based on their earnings as such. So military member will file a Pennsylvania tax return as a state of record member of the services. The spouse will file an Alabama tax return, also single, for the state of residence for the earnings in Alabama only, and pay taxes on those.
Okay, I'm just checking to see if okay, I hope that our member is still listening in the audience so that that answers her question.
Okay.
If not, then submit another question so we can clarify. But I'm going to move to another question. This is a little bit of, let's see. Yeah. I don't know if she's still on or not. It says, but we'll see. And if this, Karen, if this situation is like a little bit too kind of crazy or detailed, then let me know and I can hook you up with the individual afterwards.
Okay, that sounds good.
Yeah. So there's a couple that they both reside in New Jersey now. They're both military members. Her spouse is at active duty, and the person who's submitting the question recently came off active duty in just this month, so the 14th of January 2014. So at least in 2013,
they were active.
Yeah, they were both active. One's home of record is New York. The other's home of record is Florida. I don't know, actually, to be honest with you, when they moved to New Jersey, but I know that they're currently moving in New Jersey now. It tells me at some point, maybe in 2013, they were probably moving in New Jersey. Okay. They were married in New York, but I don't think that
so they were married in a state where it's recognized.
Yeah, they were married in a state where it's recognized. One's home of record is Florida, the other's is New York, and now they live in New Jersey. So I'm not quite sure for their specific situation what they need to do. Again, like I said, I'm assuming that they lived in New Jersey in 2013, just because it wasn't that long ago, but I'm not quite clear. But they're both service members throughout that. Oh, okay. So it says we've lived in New Jersey since 2011, actually. But throughout that entire, so throughout 2013, they've lived in New Jersey the entire time, and throughout 2013, they were also both active duty.
Okay. So for 2013, federal, they'll file the joint tax return. The taxpayer that's home of record was Florida has no state filing requirement. And the state of New York, they have the ability to file married filing jointly. And I believe that it's going to be the same scenario as the Colorado and California, where New York will be filed as a non-resident tax return with only the spouse's military income with the state of record of New York being reported to New York. It would exclude the Florida income from the other spouse that's home of record was Florida. So, and for all three of those scenarios, I'm going to research and verify that the position that I'm discussing is the correct one. So I'll follow up with all three of them. I guess the new situation for them going into 2014 is that they now have the one spouse that's no longer active in New Jersey. And I guess they, do they qualify for the military spouse relief and do you want to pay New Jersey tax or New York tax? You know, so if I can get connected with them to discuss their 2014, that would be great, because it's going to be different than their 2013.
Sure, sure. I'm happy to do that. I think she's just sweating right now about 2013, so.
Yeah, so I think the 2013 is, you know, definitely joint, or, you know, however they want to file married with the federal, and then no Florida filing, and then I believe it's going to be a non-resident New York with only reporting the New York earnings of the service members' income that's their state of record.
Okay, great, thanks. And I'm just trying to scroll really quick, sorry, to see if there's any other kind of questions. Keep on rolling the questions in, you guys, as we're finishing up. I'm trying to make sure that we get to as many of the questions as we can.
Okay, and I have my contact information on here. This is my, you know, my email address, and if something comes up, you know, we had someone posted on the APMA webinar website that they had gone to have their taxes done, and, you know, I asked a question about the schedule of allocation of income, and it was kind of met with a
Uh-oh. Karen, I think we lost you.
Am I back now?
There you go.
I leaned forward and I think I hit the mute button again. I apologize.
So we lost you right when you were saying that the AMPA member went to a tax preparer, and then they were kind of met with what I'm guessing was a blank stare.
Right. You know, on Facebook it was like, huh? What schedule? So, you know, if you happen to hire someone to do your taxes, and maybe you just have a quick question about, is this correct, or does this sound right, or whatever, I mean, you can email me. This is my day job, so, and being a military spouse, I totally get how confusing life can be from the tax standpoint, because they certainly don't make it easy.
There was one other question that was just submitted, and it says, New York State doesn't tax military income as far as I know. So how does that affect filing a so go ahead.
I was going to say, so, and this is where I did not do extensive research. There are some states that they don't tax the military, and there's no filing requirement. So you don't even have to file the tax return for that state. It's just, you know, no income tax is taken from your W-2 from the military, and there's no filing requirement. In that case, if New York is one of those states where the state of record is New York, and you receive a W-2 from the Department of Defense, whomever that is, that if there's no filing requirement, then there wouldn't be a state tax return for either the New York or the Florida. And so, you know, that was one of the things that I was going to look into from the standpoint of the state of record. Do you still have I know for the state of Arizona, if that's your state of record, you still have to file an Arizona tax return with your income from the military, and then it's taken out as a deduction. So it basically nets to zero, but you still have to file it, which to me creates more paperwork, but that's just the way the states are. So that was thank you for bringing that up, because that was definitely one of the topics that I was going to research as to whether or not there was even a filing requirement from the state of New York for a military member to file.
So I'm going to, just in the interest of time, out of respect also for Karen's schedule, because I know she's got kind of a busy day lined up today, I am going to kind of try to summarize, and for those of you who have additional questions, feel free to email me, or you can email, for example, Karen directly. And my email is Lori, Lori, at militarypartners.org, O-R-G, or you can email Karen, But before I kind of close this out, I wanted to kind of like summarize some key points. One being as very evident by our discussion that it's really obviously extremely difficult, and I commend Karen for even trying to attempt to describe the different laws or requirements for each individual state. So I would really recommend that each person really just kind of do a quick IRS search for your state to see what is required for your specific state. Meaning, are they a tax state? Or are they not a tax state? For example, Florida, doesn't have a state income tax. So first question is does your state have income tax or not? Second of all, does your state tax military pay? Does it not? Does it require it like Arizona does, even though they don't theoretically quote unquote net any taxes or not? So make sure to find out just a few pieces of information about your specific state. The next thing to remember is when you file, you need to make sure that you file your taxes, both federal and state, with your legal name according to your social security number. Your social security card. Not necessarily have to be the same as your driver's license, but definitely has to be the same as your social security number or your social security card. And then we talked about this last time as whoever is listed first, meaning whoever is the AKA quote-unquote taxpayer, you should consider having that person listed as the taxpayer on both federal and state, and moving forward as you file your taxes, just to make sure that paperwork-wise it makes it a little bit easier and it confuses the government a little less, so it ensures maybe of a faster communication time with respect to getting your money or any tax refund that's coming to you a little bit better. The other point to remember is just you have to file married if you were married in 2013. It doesn't matter if you were married on January 1st. It doesn't matter if you were married on June 1st or even December 31st. As long as you were legally married in 2013, you must file your taxes with the status of married for federal taxes. And then, of course, depending on what individual state you are filing your taxes for, if they allow it or not. And then you have the choice after that to file joint versus separate. And then pay attention to whether or not you live in a community property state, because that will dictate whether or not you have to report some of your spouse's income as your own. So those are a few things to just remember to keep in mind about overall points. And then that one slide that Karen had that broke it down by the different states and what their requirements are. Even if, for example, some of those states that don't require you to submit individual information, I would make sure that if you're doing your own taxes, you keep things in hand, because even if states don't require you to submit individual monetary amounts that you and your spouse make, even if you file jointly, I would have that information filed away somewhere, because who knows if we're going to get audited in the future. And lastly, I'll just say, for those of us, which is probably 99% of us, especially being in the military community, for those of us who have multiple states, multiple W-2s from different states, all that, and then your spouse's state or home of record might be different than yours, what we're trying to make sure is that you don't get quote-unquote double taxed. So when we're talking about what state you need to submit your taxes from, if you work, so there was that example of, the service member's state of record is, for example, Pennsylvania, but you've only ever worked in Virginia in 2013, you want to really make sure that Pennsylvania is not taxing you and that you're not losing money to the state of Pennsylvania, for example, when you've never even worked there in the year of 2013. So really try to kind of tease that out so that you're not losing more money than you need to. And then, Karen, if you have any kind of last minute kind of tips for them, that would be great to close with.
No, I mean, like I've already said, depending on your level of comfort, because I truly get the amount of stress that having to file a tax return can cause someone. Really think about whether or not you want to do it yourself. And if you do choose to go to someone, that you absolutely choose someone that you know, or that you feel comfortable with and that you believe knows your issues as an LGBT member, you know, so that and if you don't feel comfortable, ask for your documents and find someone that you do feel comfortable with. So that's pretty much, you know, don't lose sleep over doing your taxes. I mean, there is a cost involved in having someone else do your taxes, but I'm a firm believer in that I'm willing to pay for someone else to do something that's causing me a great deal of stress. And you know, my spouse and loves to give me a hard time because you know, I absolutely love numbers. Give you an example, we went to a hockey game the other night and there was 3 goals scored in succession, and the first person that scored it was number 40, and the second person that scored it was number 15, and the third person was 55. And I turned to my cousin-in-law and I said, oh, I said, that's funny. I said, 40 plus 15 equals 55. And she looked at me, she's like, we're at a hockey game and you're thinking numbers. So, you know, don't hesitate to ask for help outside to do your taxes.
All right, well, thank you so much to Karen. She is doing this on her own time, totally volunteering, and I always love to have one of our own family members giving back to our own community. So I really want to thank her for taking time out of her weekend schedule. Thank you all for making the time, and please make sure to kind of, if there's anybody else in your community who wasn't able to participate in this webinar, we're going to put the slides up on the website, which is www.militarypartners.org. The slides from the last presentation on federal taxes are already up. I am recording this, and there was some sort of weird snafu with the first recording, so hopefully this recording will work and we're able to post it on the website as well. It will be located on the same website under the Resources tab. Make sure to please reach out to the rest of your community members in our LGBT military community and pass the knowledge on forward, and then let them know that if they do have specific information or questions, while we're not necessarily giving individualized tax recommendations, we're happy to help them or by steering them in the right direction. So thanks, y'all, and have a great rest of the weekend, and breathe deeply. We're here to help you as much as you can through this tax season. So thanks, Karen.
Thank you, and thank you for everybody for your wonderful questions.
All right, have a good weekend.